Hey, what's going on, everyone? So today I'm going to go over the draw on liquidity. And the draw on liquidity is probably one of the most important components in your trading. Um, I see a lot of traders that they understand entry models, they know what to look for. They go um, over breakers, order blocks for value gaps, inverse for value gaps, um, rejection blocks, which that is all fine. But the main thing is that we have to understand when the market goes into a buy program and when it goes into a sell program. Okay. And the market does two things. It's going to hunt a high and it's going to hunt a low. Okay. The market's going to go from point A and it's going to go to point B. And our job here is to become masters on identifying when this is going into a sell program or when it's going to go into a buy program. We have to identify when it's going from destination A to destination B. And again, this is not financial advice. I'm just giving you sauce from just experience throughout my own journey. So don't take this as financial advice. And again, if you're enjoying this type of content and you want to go deeper, check out the link below. I've built a private community of traders who like to think for themselves, who like to dig deeper into the why. It's not a signals group, okay? It's about learning how to read the market like a sniper. I'll teach you what I look for every single day. I drop the full daily and weekly analysis. I have additional videos in there in my Discord. Um, I show you what I look for, trading psychology. I show you all of my wins, all of my losses. I share my notes with you, and mainly I like to trade the indices. So I share most of my thoughts on the indices, but I do go over forex and some crypto. So if you're interested, check it out. Um, so back to what I was saying, the the algo only cares about going from point A to point B, and this is how it looks like. We're going to purge. There is continuation models, but what I look for, they're purges. And on a higher time frame, we can trade a continuation, but mainly on the lower time frames, we're looking for purge and revert models. Okay, so the main foundation of this model, they're market maker models. I have a playlist in my YouTube. I created a playlist that way you can understand and put all of these puzzle pieces together because everything is a puzzle piece, okay? We have to put all of these things together to be able to understand everything. And because time is fractal, well, before I go to time is fractal, one, understanding your market maker models. Two, understanding time cycles, PXH and PXL, okay? Your the so the market does not care about your breaker. It doesn't care about your fair value gap or order block. Okay, it cares about which high and which low it wants to target. So our job is to identify what high or what low. What are the probabilities is going to go target that low? Okay, so for example, the market moves. Price will only draw towards internal range liquidity and external range liquidity. Okay, and write this down. I'm giving you a lot of sauce here. Internal range liquidity and external range liquidity. Everything is a market maker model. Okay. So just as an example, here, um, we can't find the tool. So here is your retracement, and here is your market maker model. Okay, so what happens here? Okay, we purge liquidity, right? And we're going to target the hourly high because I use my hourly as my higher time frame. Okay, and what is this? This is Asia. Okay, so let me zoom in a little bit so you can see the time cycles. We purge Asia low and we target London high. Okay, and it's usually you're going to target a low, and then you can have a previous day low that you take, and then your low hanging fruit can be either a previous 90-minute cycle high, or it could be a previous session high, or a previous daily high. So here, what happens here? Same thing. This is the previous 90-minute cycle. If I zoom in, you purge your 90-minute cycle, right? Purge liquidity right here. You do a stop hunt and you target your London session high. Okay. And this is what I do every single day. Okay. Why? Every day you have a move. Okay. We just have to understand it. And right now, I'm trying to show you how to understand that. Okay. Every low or a previous cycle low or a previous cycle high, that is your point of interest. You use these highs and lows as a point of interest. Okay. Let me zoom back out to the 1 hour. Let me delete this here. You see, you see this high. Let me take these lows here. These. All right. So even here, you see this hour, right? This hourly high. That's the hourly high. What happens this next hour? This next hour retraces, and then it comes back to take that high. So you rebalance, and then you target external liquidity. How does it look? Right? Let me take my tool again. In this time frame, if we zoom into the 1 minute, we retrace like this, right? We retrace down like this. This is what this whole wick is. And then we go back to target the hourly high, which is external liquidity. If you don't like that example, let's look at other examples, okay? This right here, just this whole thing right here, all of just this is a market maker buy model as well, okay? And how is that a market maker buy model? Let me take this tool out again. Actually, I'm gonna add it as a favorite because I've been using it a lot. So this right here is the sell side of the curve, okay? And this right here is your buy side of the curve. So you target internal liquidity, and then you're gonna come back and target external liquidity, okay? If I zoom into the 15 minutes so you can kind of get a better understanding what happens in here. Let's zoom back in. This is your London session high. This is a 90-minute cycle. What happens? This cycle, this 90 other 90-minute cycle, look what it does. It purges. Look at that. It purges the previous 90-minute cycle. You're going to look for your time of interest, your change of market structure, your CSD, whichever one you prefer or want to call, and then you're going to target the high, right? That's why I hold my trades for so long because I'm looking at the higher time frame. I look at the hourly high, and I know once it rebalances, I know it's going to target this high, and I take profits along the way just in case because not all the trades make it all the way up there, right? So I take profits along the way. I start moving my stop loss, and I target the highs. Okay, so that's another example. When you have identified the correct draw on liquidity, write this down, okay? When you identify the correct draw on liquidity, every trading model will succeed. Okay, it's not going to be a magic pill of, oh, this is the best breaker entry. This is an A plus breaker entry. Oh, this is a A plus fair value gap entry. Oh no, this is an inverse fair value gap. This is the A plus inverse fair value. There's no such thing as that. What you need to align with time, okay? Because any of those entries will get respected when you enter at the right time. Okay? So understanding time cycles, understanding market maker models. I mean, look at my video, internal liquidity, external liquidity. Look at the one that I created for market maker models. I have one for time cycles. Check out the playlist, and I mean, uh, study these charts on your own, man. I mean, everything's a market maker model. Every single thing is a market maker model. Right here, and we go back out to here, right? So internal liquidity, and then we're gonna target external liquidity, right? We're gonna target the high. So check it out in your own charts. If you have any questions, send them to me.